Hello, and welcome to another video by CashFlow Rebels. Today we're going to go over AT&T stock and why I have this part of my dividend portfolio, despite their poor returns in the last few months. And we're also going to include some updates in their evaluation and why I think the stock keeps failing. Before we start, please subscribe to our channel to see all our new content and more of stocks that are going to be in my dividend portfolio. So in May of this year, AT&T's Warner Media spun out to join Discovery, forming a new company called Warner Bros. Discovery. This deal is expected to go through in the middle of 2022, and AT&T shareholders will receive stock representing roughly about 71% of the new company. And with this news also comes some downside to AT&T, because AT&T is also downsizing their dividends. So maybe their dividends are going to get cut in about half. Now, ever since this was announced, AT&T has been on a free fall. It's decreased in value about 16% and still keeps falling. So why would I keep buying? To tell you the truth, I'm looking at this as an opportunity for the future value and for growth. It also might sound a bit biased, but I personally have them as a cell phone provider. Why not invest in something that I already put money into myself? Might as well get something back in the form of a dividend and kind of like a growth stock. Lately, they also been expanding their 5G coverage to consumers and small businesses. AT&T is also growing their streaming service, HBO Max, and it's been growing extremely well in the past couple months. According to their 2021 Analyst and Investor Day presentation, AT&T is looking to expand their streaming services to over 60 markets in the next few months. And they're about to add some new subscription service to support ads, which it actually helps to generate some more income and also help build up the company. In total, they plan to have about 120 million new subscribers in 2025, which is very bullish for the growth of this stock. I'm really looking forward to see new things happen with them, and great to see how this stock will turn out in the next few years. My current holdings for AT&T is about 3 shares, which is about $1.56 every 3 months, and about $6.24 a year. Now, I know this doesn't seem like a lot now to live off my dividend payouts, but I also picked this stock because of the days the payouts are set. In my dividend spreadsheet, they pay out on the first week of the month. This helps my layout to stay in the flow of getting a dividend every week. As you can see for February, an example, May, August, and then November. This helps me stay in the flow to get a dividend every week. And with a combination of all the other stocks that help out pay out every week of the month. So to end with this final thought, $1,000 investment in AT&T, you would have roughly about 39 shares. Within those 39 shares, you have a payout about $20.28 every 3 months and about $81 a year. So I know this is just a start for dividend investing. I know it's not a lot for some people, and I also know it's not a lot compared to another stock that I really love in my portfolio, CLM, but I chose this other stock because I didn't want to have all my money in one basket. So it's really good to just try and diversify and go into other sectors. So I think you guys should really just take a look at it, think about it, let me know what you think. But thank you for watching, and catch you in the next video.